Hey guys, what is going on? Welcome into the video. So in this one, we're going to be talking about the overall broad stock market, what to watch for and expect next from the stock market, and then going over a big swing trade opportunity that I'm watching for to play in the next week and the coming weeks. So first off, taking a look at the chart of the S&P 500, you can see that the last 7 weeks in the market have been negative. Now for reference, this is the first time since 2001 that there have been 7 losing weeks in a row, and there have only been 3 other times in history that this has happened. So in my opinion, the market is setting up for a pretty big rally out of this big downtrend. On Friday, the SPY bottomed right at the 38.2% Fibonacci retracement from COVID lows all the way to all-time highs. That happened right at $380 per share, which is a major level of support. And zooming in a bit, we can see that this is also setting up in a textbook falling wedge pattern. And if this pattern plays out, it can result in a large bounce back move for the market. Now, if it plays out, this is how it'll look and create an explosive move back to the upside. But of course, not every pattern will play out. So it's important that SPY does not break back below that 380 level of key support. So I'm watching that 380 level to hold this week. And as long as it holds, it can trigger the breakout on a break above around that $398 to $400 range out of this falling wedge and bring up a lot of great trading opportunities to the upside this week and or the next few weeks, depending on if that breakout would be a true reversal or just another dead cat bounce bear market rally before more downside. And one of the main trading opportunities that I'm watching for if the broad market can make that breakout is along with Amazon stock. So Amazon has a huge catalyst coming up with their stock split, which we're going to talk about more in a sec. But it's also been showing some signs of relative strength in the past couple trading days, which means that it's held up better than most other mega cap tech names such as Apple, Microsoft, Google, and Tesla. While all of those other stocks have made lower lows this past week, Amazon has not dropped below that $2,050 level that was made a couple weeks ago and has made a higher low so far this past week. So what this tells me is that if the market does have a relief rally out of the falling wedge and breakout like we talked about, Amazon has a good chance to outperform, especially with this stock split catalyst coming up. A couple weeks ago, it bounced off that $2,050 per share level, which was highs from 2018 and 2019, so past key resistance is now becoming new key support and is potentially making a higher low here, which can set up a strong bounce and potentially a move towards that gap fill up to $2,800 per share. Also, the great thing about this setup is that you have a defined risk level for those who enter for a swing trade, where you cut loss if it breaks below that $2,050 level of support, so just risking about 4.5% max downside for those who entered this for a swing trade. So the stock split is coming up with the shareholder vote happening on May 25th of this week, which is pretty much a lock to be approved. All shareholders are definitely going to vote to approve this, and then the split will happen on June 3rd. Now, of course, though, the market that we are currently in is a different environment than 2020, 2021, but stock splits almost always act as a positive catalyst. For reference, Apple had a split on August 28th of 2020, Tesla split on August 31st of 2020, and Nvidia split on July 20th of 2021. Now, all of these resulted in large stock price moves to the upside and would just be a huge psychological barrier broken for most investors buying Amazon at $110 per share instead of buying it at $2,200 per share. Also, Amazon is trading for a super attractive valuation at current levels. It's trading for the cheapest enterprise value to EBITDA multiple in the past 5 years and the cheapest multiple since 2008. I have a full analysis on Amazon's valuation in a video that I made a few weeks back. I'm going to link it above for anybody who is interested in watching and checking that out. And also, I really don't think that there's a company that is affected worse from current oil prices than Amazon. With the amount of deliveries and shipping that the company does, there really isn't any company that compares to the negative environment that we are seeing right now. Also, Walmart and Target's earnings last week confirmed that the Amazon earnings was not an Amazon-specific problem. It is a consumer issue. If anything, those numbers show that Amazon's e-commerce continues to build a greater lead over Walmart's new delivery service, which was a speculation not long ago that Walmart was starting to take Amazon's share. That is pretty much proved false at this past earnings. And the market is pretty much already pricing Amazon for terrible numbers for the next quarter and beyond, which is expected to happen, but the oil and inflation situation is not going to get too much worse from here, and Amazon will be one of the largest beneficiaries once this finally turns around, because it is pretty much the company that is in the worst situation right now and is worst affected by those current issues. Also, this weekend a headline came out that Amazon is looking to cut down on their warehouse space. They plan to sublet and end big leases. On first glance, this headline looks like a pretty big negative, but in my opinion, this is actually a positive development. First off, the amount of space that they're cutting is only 5% of the square footage that was added during the pandemic, so very minimal in the grand scheme of things. Secondly, this shows that management is correcting their mistakes. Since Jeff Bezos stepped down from CEO and Andy Jassy took over as the new CEO, Amazon has lost about $800 billion in market cap. As CEO, Jassy has overhired and overbuilt on factory space, and obviously the company's projections have been way off, expecting the pandemic trend to continue, but currently it is reverting back to the mean. But what management is doing now is a step in the right direction. They're now cutting back on costs, and stated at the last earnings call that they are focusing more on profitability moving forward, which is what Wall Street wants and what will have the most positive effect on the stock price. So even though in the short term Amazon is not in a good place, it can pretty much only get better from here. And since it's probably the worst company affected by oil prices, wage inflation, etc., all of these economic issues start improving, which may be a couple months, which may be a year, who knows, but we do know that the economy is going to get back to growing. Amazon's AWS growth horizon is enormous. It's just one of the greatest companies in the world on a 40% off sale. Very, very attractive for a short-term trade, risking you at 4.5% down to those recent lows, and also very attractive for a long-term investment in my opinion. Just giving my thoughts, opinions, and trade idea. Of course, it's not financial advice, not an advisor, just sharing what I'm personally doing with you guys. Hope you enjoyed. Hope I provided some value to you in this video. If so, make sure to hit that like button and subscribe button. It helps me out a ton, and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that's the first link down in the description. Let me know in the comment section down below what you think is going to happen next in the stock market and what trade opportunities you're watching for this week. Thanks for watching, guys. Really do appreciate it. I'll catch you all next time. Peace out.